Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday, woohoo! And well, June 29th. Wow, literally this weekend will be halfway through the year already. It's gone by pretty quick here. We do got quite a bit of economic news releases scheduled for today, so we'll just jump right into it. We'll start off with the personal income for May's numbers. So back in April, we had a 0.2% growth in income on the average income out there. We figured that would maintain itself, and it did. So basically, the forecast and everything else kind of maintained the growth of 0.2%. So now we got the other spectrum, where consumer spending for May. So back in April, we had a 0.1% growth, and we figured it kind of drop down a little bit, and it did. So basically, people made a little bit more money, but aren't spending, is what we're seeing right now. It looks like people are doing more saving. So it can be good, but once you're trying to get the economy moving, obviously that is not good. So another index, this is a huge one here, the core PCE. This is the personal consumption expenditure, and this is the core where you strip out the volatility of the food and energy. And this is actually the Fed's favorite gauge for inflation. So we had a 0.1% growth for April. We figured it would kind of grow a little bit more in May and basically maintain 0.1%. So very tame numbers for inflation. We're not showing really any inflation concerns at the moment. Next one is Chicago PMI. This is the manufacturing in the Chicago region, and this is for June. So back in May, we had 52.7% growth. So what that means is that anything above 50, we're still seeing some growth, even though it's pretty modest. We figured it'd grow a little bit more to 53, and it did a tad more, almost to it, but somewhere in this middle. So very modest growth there. So at least it's not going the opposite direction. And finally, we got the University of Michigan's Consumer Sentiment Report for June. Basically, this is a survey that's brought out and seeing how basically the consumers are feeling, about what things, the economy and everything, where they're going. So for May, they had a 74.1. We figured it would taper down a little bit to 74, and it dropped down to 73.2. So back in the heydays, we were about like 90 plus, but right now we've been kind of pretty low lately. When everything hit, we were way down there, like around 60s or so. Now we're about 73 or so, slowly kind of growing a little bit, but we took a step back, obviously, so far in June, it looks like. So, all right, so let's go ahead and take a look at the headline news, what we got here. Stock market's way up. Why is that? It's we had some decent numbers there, nothing to really bring it up because I mean the Dow is actually up about 220 so far this morning, so that's a pretty big jump. It has to do with the European community here. We had with their meetings there, we had the EU leaders kind of pledging assistance towards Spain, basically kind of relaxing on their payments, maybe lending some in some other areas where they're going to try to help out Spain and then possibly as well as Italy, since they're kind of on the verge as well. And then also they're creating another fund for trying to create some stimulus, some type of growth in the area so they can create some economic growth to kind of get things kind of moving along over there. And then we got the bond market. So we'll see what interest rates are doing today. And I apologize about this. This is actually the 4% coupon graph here. I'm having some technical difficulties, but it'll give you kind of some basic guidelines as to what it'll kind of look like. It'll look very similar in the sense, at least in the pattern-wise. This here will be off. But we had a pretty big drop in the morning because of the sharp increase of about 220 of the Dow, because money was flowing from the bond market into the stock market. So we had a nice increase here. We left off about 105.28, as you can see here, par close. So a nice little rally yesterday. We did, however, close this gap, which is good as well. But we dropped down to about almost 30 basis points lower, and now we're up about 15 basis points, kind of making up some of that drop. So not only did we close this gap that would have been open, and this gap, we'll see if this can maintain itself. But the market's kind of liking what they're hearing from Europe so far, and that's what's kind of driving the market. So interest rates are down or are up a little bit compared to yesterday's. But again, these aren't huge numbers. These aren't like huge, even though this may look like it a little bit, but it's not. It's not like it's gonna make it a quarter or 0.5% difference on the interest rate. It's just you're looking maybe in the 1/8% range. All right, folks, you guys have a wonderful weekend. Enjoy yourselves. Next week we got 4th of July here in the U.S., so I hope you guys have a good, safe weekend. If you're not around, hopefully you guys enjoy your holidays. See you next week and have a wonderful day.